2024-25 was an extraordinary year for the international group pool, with several large claims across the world. For North Standard, this has been a more benign claims year. But whilst there have been fewer claims falling upon the international group pooling arrangements, the club believes caution is essential. With conflicts around the world continuing, rising costs and political uncertainty, particularly in the area of trade, there remain many challenges. But there have also been many positive developments for the club. On this episode of Taking On Tomorrow Together, we hear from some of North Standard's leadership group about the past year and what lies ahead. We reflect on the Pre Renewal Report and what this means for premiums in 2026. And we look at some of those developments and challenges in more detail. North Standard's Pre Renewal Report projects a year-end combined ratio of 104%, which is 10% lower than 2024-25. And it's advised members of a 5% increase in P&I premiums for the marine insurance year, starting on the 20th of February 2026. Managing Director Paul Jennings.
The key messages this year for North Standard are really all around continued progress. The first 9 months have seen, pleasingly, a lower level of claims than we saw in 2024. We've seen a solid investment return, which is over 6% currently, and an improved combined ratio, which we are projecting to be in the order of 104%. These results also are supported by strong results from our diversified specialty sector. These lines are delivering consistently over the last few years combined ratios of below 90%. And as our specialty lines now comprise nearly 30% of overall group income, this is a significant support to our overall result.
Nick Jelley is North Standard's Chief Financial Officer and says this financial year so far doesn't look like it will suffer from the same number and value of pool claims as the 2024-25 year.
There may have been fewer claims so far on the pool than last year, but the average value of those claims is higher. Of the 7 pool claims notified so far after 9 months, 2 of them are well in excess of $100 million. So the average value is going up. And if you smooth out those pool years, we still need to be publishing a 5% GI to maintain our overall combined ratio at or close to break even.
But what about key developments from the last year? Paul Jennings says it's been another positive year from a strategic development viewpoint.
And in particular, as we have continued to deliver on our commitment to diversification, recently launching our upstream energy and marine energy liability sectors. And that was really hot on the heels of announcing the combined hull and machinery and P&I products, leveraging the expertise and experience of both Sunderland Marine and also our coastal and inland divisions.
And Managing Director Jeremy Grose says another key area for development has been North Standard's work externally, using its position in the market to give shipping a voice.
One area where we've continued to develop our strategy on behalf of ship owners is to build on the work that we've been doing, speaking to policymakers, seeking to deliver a better result for ship owners by being able to explain how it really works in practice from a ship owning perspective and what the impact of their policy is. So hopefully and intentionally, we're ending up with a better outcome for all.
As we've heard, there have been fewer large claims in this financial year so far. But what about the claims performance overall? Sam Kendall-Marsden is Chief Claims Officer.
We've experienced a much more benign experience this year compared to last year. And by that, I mean both the frequency and value of attritional claims are down. And also, we've seen fewer large claims, so those above $1 million. And in fact, this year we've notified 2 claims to the pool as opposed to 5 claims last year, which has been a welcome development.
And Sam says there are a number of factors that are driving claims costs higher.
social inflation in US personal injury cases, in particular in certain plaintiff-friendly jurisdictions, and as well general inflation and also geopolitical instability. We also see the impact of ongoing trade disruptions related to conflicts and otherwise.
It's now 3 years since North and Standard merged to form North Standard, and Chief Underwriting Officer Thya Kathiravel says the size of the company offers real benefits.
I think the scale of the club, both in terms of the premium income that we are able to generate as a combined club, coupled with the fact that we have a very large portfolio of assets under management, give us that capital base that allows us to withstand the volatility of the occasional year when claims are elevated. We don't believe claims have necessarily changed in terms of their long-term trend, but we do believe our scale allows us to withstand the impact of occasional volatility from these claims.
Looking at the market more broadly, what does this year's increase mean in the context of market conditions? How are other insurers faring in this current climate? Nick Jelley again.
I think all clubs are seeing large claims getting larger, and I think all clubs have seen some back year development on pool claims, and that's going to be a drag on all clubs' underwriting results. Those clubs that have a more diverse mix of business, such as North Standard, will see a bit less volatility, but volatility will remain.
As Paul Jennings has already mentioned, there have been further strategic initiatives this year in response to feedback from members and brokers, and provides liability cover beyond traditional P&I. Chief of Specialty Sectors Nick Wolfe says it's vital for North Standard to continue to develop new products as it aims to support growth and diversification.
Profitable growth and diversification is one of our strategic priorities, and specialties are our primary vehicle for that. So our approach is to create genuine new sources of high quality growth. And that's exactly what we've done, of course, with this new upstream energy and marine and energy liability sector launches. It does a few things for us. Firstly, of course, it opens up entirely new pools of price adequate premium. So it lets us grow sustainably without lowering the standards that have put us where we are today. And they also diversify the portfolio. So that gives us more stable returns over time. We know we're in a really strong position there and we want to build on that. So now with these new sectors, we can offer complementary property damage and liability cover that sits alongside that. And that's exactly what members and brokers are telling us they want. So from every angle, if you like, growth, diversification, capability and relevance, these new products in this strategy is strengthening North Standard.
Growth, diversification, capability and relevance. Keywords from Nick Wolfe and for North Standard. So what might that look like moving forward? Paul Jennings outlined some of the important focus for the year ahead.
Key priority really for us has to be, for the next 12 months as we move forward, has to be to maintain our financial stability and at the same time to build the capital base for North Standard. But very importantly, we must continue to invest in and enhance our service delivery to benefit our members from a resource point of view, continue to innovate and develop service and products and to add value to our members. And I think in turn, to ensure that we continue to remain relevant to the needs of shipping. There are many challenges ahead, in particular claims involving environmental incidents and inflationary pressures around that. And that's on top of the challenges that crew have and shipping has with continued war and the physical attacks that take place. As part of the shipping industry, we are impacted by all of the challenges that shipping has, and there are many at the moment, including trade wars and tariffs, sanctions being used, increasingly weaponizing shipping to achieve the political and policy aims of governments. And more recently, of course, the uncertainty around the fuel transition.
And Jeremy Grose says, given what's happening in the world, there's a continual challenge for North Standard and the industry more broadly.
It must be an unusual set of circumstances that there are so many challenges for ship owners, which I see at this time. That makes the investment environment, I believe, rather difficult for ship owners. So all of these things have an impact on us, as well as the continued geopolitical uncertainty. I think overall, lots and lots of challenges for ship owners, some of which directly impact us, like the pressure on claims, and some of them impact on us through their impact on very difficult trading conditions that ship owners have to navigate.
Thank you to everyone who contributed to this episode of Taking On Tomorrow Together. Managing Directors Jeremy Grose and Paul Jennings, Chief Financial Officer Nick Jelley, Chief Claims Officer Sam Kendall-Marsden, Chief Underwriting Officer Thya Kathiravel, and Nick Wolfe, Chief of Specialty Sectors. Click follow on your favourite podcast player to ensure you don't miss any episodes of Alongside. There you'll also find episodes of our sister podcast, Future Thinking, as well as our recent episode of Alongside, hearing about Sunderland Marine's support of the rock lobster industry in southern Australia. That's all for this episode of Taking On Tomorrow Together. I'm Danielle Yałowiecka. Thank you for listening.